Once again, the price of gold is in decline, slipping to its worst levels in more than a month. So what's in store for the next few weeks, and where could there actually be a trading opportunity as we head towards that flash crash low? It's been a bit of an uninspiring year, I think, if you're a long-term holder of gold. Here we are, the last 10, 11 months or so, and you can see the price has been slightly down, but definitely sideways for much of this year. A far cry from the all-time highs we saw last year. But I wonder if there's an opportunity coming in the next couple of weeks or so. I think it's an interesting market to watch going into October. We had this flash crash in August where the price spiked down to 1660, but turned around pretty sharpish. So even though it's definitely not my favorite market in recent months, because it is just so sideways with short-lived trends, but then turns around very quickly the other way, I do think there's an opportunity here. Let's take a look at our open positions. So the usual mix of trades, natural gas has been a solid performer again, a great trend there compared to, for example, gold for much of this year, but nothing on gold. So I'll see if we can rectify that in this video. So as usual, I'll talk about some of the things affecting gold, what to watch out for in the weeks ahead. Then we'll come back onto the platform, look at the charts in a bit more detail and see what the trade is to do. Hello, I'm David Jones from Capital.com, and I thought we'd do an update for gold. Going into October, what might we expect for the precious metal in what's been a disappointing year? But more about that in a second when we take a look at things in a bit more detail. So as usual in this video, I'll talk about some of the recent news about gold, why we're seeing it, I think, pretty unattractive at the moment from an investment point of view. The big level to watch is a really big one coming up, actually. So I think it's going to be an interesting month. Then we'll jump onto the charts and take a look at things and see if there's a trade to do. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, it does help support the channel. It means we can continue to do lots of different markets throughout the week. And of course, every Friday at 2:30 UK time, I do a live stream direct from the YouTube channel where we look at a whole host of different markets. Right, let's get into it and take a look at gold in a bit more detail. So it's been a disappointing year for gold. I don't think there's any other way of describing it. We saw in the summer of 2020, fresh all-time highs up around $2,075 an ounce. But the story this year has been one of just sideways trading at best and some shock moves to the downside. Even at the time of recording, we're seeing the price of gold drifting back to its lowest levels in more than a month or so. So we did see something of a bounce back from mid-August. But I think like all of the rallies in gold this year, it's proved to be unsustainable. But August was an interesting month. We had that flash crash on the 8th of August where it lost $100 in an hour at the start of the week. Sunday night trading as Asian trade got underway. And I think what is going to be interesting for October is how the market reacts, how the price of gold reacts as it gets back near that flash crash low. So that for me is the level to watch going into October. So why isn't gold proving to be attractive to investors? Well, even though we've had volatility in the stock market in recent weeks, we did see in September stock markets, if you look at the S&P 500, hit fresh all-time highs. So investors getting a great return for embracing risk, for investors who want alternative assets. Of course, there's, as we said last time round, the cryptocurrencies have been really volatile and performed pretty well this year, even though we've seen heavy falls since May. And I think gold and silver, to an extent, they've almost been forgotten about. They are the forgotten assets or the forgotten markets, I think, in the face of other more attractive alternatives. But what would change? Clearly, we are seeing the concerns about inflation getting ratcheted up. I do still feel that inflation could well end up being a bigger problem for world economies than central banks are telling us it should be. So I think perhaps if inflation concerns continue to increase over the next 3 months, we could see investors looking to add gold at least part of their portfolio as the traditional hedge against inflation. Plus, of course, if stock markets come under some stress, defensive assets such as gold will appeal. We've seen in the last couple of weeks some of the concerns around Evergrande, the Chinese property giant. We did a video on that earlier this week. The worry there has been about contagion into the broader financial system. If that did come to pass, then we'd expect to see the likes of gold benefit from this. But let's see how it works out. But as usual, there's always a potential opportunity in both directions. If you thought gold was going to collapse from here, going short is one option. I'm going to look at a buying opportunity ahead of this August low. But let's talk about the levels to watch. So for me, the big level, it is that August low, that flash crash low coming in around 1,660. I think if we break through that, we're on fresh lows for the year. I think the risk is we could see more gold bulls start to throw in the towel, and perhaps we see some older levels that we haven't seen this year get revisited. But as usual, to put some color on these numbers, let's take a look at the charts. So this is the last 12 months or so for gold, and you can see it's pretty sideways and arguably slightly lower. If we went back to where was it, October last year, it started the month around $1,900. It has not spent very much time at all above that level for this year, but we have seen it build a base. If we go back to March, April of this year, we saw that 1680 level hold the price up. We saw a good rally off that level, spiked through it briefly in the flash crash in August, but did bounce back about $180 from those flash crash lows. So I'm wondering how that low is going to affect the price in the weeks ahead. If we take a look at the RSI down here, clearly on that flash crash sell-off, went really oversold on the RSI. The market did turn and recover. RSI pushed near overbought, the market's rolled over, and here we are again. We are down back near oversold. So for me, it's a directionless market, looking at it from a medium-term point of view, but there is a definite range. So the trade I'm going to do here, I'm going to assume that we saw the prices, those lower prices below 1,700, getting rejected pretty quickly in the flash crash. So the trade I'm going to do is be a buyer and use that flash crash low as a reference point for my stop. What I'd normally do, I'd sit here and watch it over the days and wait for some strength to come in. Because I'm recording the video now and the price is still weak, I always like to try and do a trade on the videos if I can. So what I'm going to do is leave an order in to buy if the price pushes much lower from here. But if we take a look at the intraday charts, you can see just how quickly it turned off or recovered off that flash crash low, and we had a bit of support coming in as the market paused around 1720. That's only $13–14 below where we're trading now. So what I'm going to do, it's under pressure at the moment, the price of gold. I'm going to put an order in to buy at 1720. So if it slips about $13 from here, get me in the trade. And I think if we start taking out that 1660 level from August, we could see quite the sell-off. So what I'm going to do, I'm going to be a buyer at 1720 and put a stop at 1650. Let me place that order now, then we'll jump back onto the charts and take a look at what could happen if that level gets cracked. So my order's ready to go. The price at the moment is about $1,734. I am going to put an order in to buy 4.9 ounces if the market drops to 1720. So, only another $12–13 from where we are now. If that order gets filled, put a stop loss in at 1650. Because if we start breaking to new lows for the year, I want to be out of the trade. I'm happy to take my manageable loss and look at it with a fresh pair of eyes. Let's place that limit order. Let's send it in, and the order will sit there at 1720. So the order's placed, buying 4.9 at 1720. Let's just take a look at the bigger picture for gold. So that has been quite the floor. You can see here underneath the price. We've got the trend line coming in. That what is it? 3-year trend line now coming in just above $1,600 an ounce. So for me, I think this is really an important level, almost going back to April of 2020. I think if we do start to break to new lows for the year for gold, we could well see the start of a much deeper sell-off. But let's not get ahead of ourselves. We saw that 1660 level hold in August. Yes, the price is weak at the moment. Let's see if I get filled at 1720. If I end up getting stopped out of this trade, I think we'll have to take a look at the validity of this longer term trend, because it could look like there are cracks appearing in that trend. Clearly, trends don't go on forever. So for me, 1660, the August lows, is a big level to watch. I think October is going to be a really interesting month for the price of gold. That's it for the update in gold. We'll see. I don't think we're going to be seeing $2,000 anytime soon for the price of gold, but perhaps down at these levels, we see that old August low come back in and support the market. Let's see how it turns out. As usual, we'll do an update as the weeks go on. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.